What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Wednesday, February 21st. Well, guys, so the S&P 500 or SPY stock, really it's an ETF, of course, down $2.75 a share here today, minus 0.55%. Actually hitting about the biggest red on the day that we were, right around midday here, just like 11:40 Central, 12:40 Eastern time. Recouping some of those losses into the close with this big dump off and then another recoup into the close. Let's take a deeper look here and get really contextual about SPY, kind of like the overall S&P, right? As we head into tomorrow, we'll take a look at some obvious bias, and we'll do so on a number of different time frames, okay, areas to watch. Let's start here by looking at the 1 minute chart, because as you guys know, SPY, particularly with options, but oftentimes even with just shares of stock, is a stock, I suppose, or an ETF, that I will very commonly trade intraday or even scalp depending on the setup present. Now, there are days where the overall market is quote unquote in play, like when there's a big market catalyst, all eyes are on the market, and there is actual edge with many playbook trades in the market. But most days, understand that the market itself is not necessarily going to be what we call in play, meaning there's significant edge, elevated volume, a fresh catalyst. And when we're on one of those days where the market isn't in play, which is going to be the vast majority of days, by the way, we're left with kind of two options. First of all, our playbook, at least mine, dwindles down dramatically, and I think you'll find that most traders' playbooks do when a stock, or an ETF in this case, is not particularly in play. But you're still left with some setups. Like for me, I'm left with a setup that I developed that doesn't necessarily require the stock, or again, in this case, the ETF. I'm just going to call it a stock from now on, just make it easier. It doesn't require it to necessarily be in play because the setup itself is so in play. It has edge. Regardless, like it almost works better, at least in my testing, on blue chips. Things that aren't in play just have a lot of liquidity, of volume. So I call that setup, again, the repeat offender setup. I alert this setup every time I'm looking at a scalp setup of that style specifically, especially I should say, it gets alerted to the Roensch Capital Gold server. The traders in there. If you guys want to take a look at the different membership options, check out that first link in the pinned comment. The price has gone up over time and it will continue to do so, but whatever rate you join at is the rate that you'll stay at for as long as you retain your membership. Now, as far as repeat offenders, there weren't really any clean setups on SPY today. Oftentimes there are. It's actually one of the more common stocks, I'll just call it, that I scalp with that style. In this case today, there really weren't many great setups, but what you will see is that a lot of traders who are intraday swing traders who plan to hold trades for anywhere from like 30 minutes to 3-4 hours oftentimes, they'll buy chunks, right? Increasing their volume, their size on each additional leg down in this case, right? Because when there is no catalyst, this all changes if there's a fundamental news change, by the way, a fundamental catalyst, like a fundamental change from a news catalyst. But when there's no catalyst and the move is purely on price action or emotion, what you'll see is these intraday swing traders, myself included, I'll take a chunk on a big leg down when it's pressing ATR with a tight stop. If I get stopped on the next leg down, I'll take a slightly bigger chunk, right, with a tight stop. If that one gets stopped on the next leg down, right, assuming these are aggressive downside legs, I'll take a bigger chunk. You see what I mean? Because the quote-unquote bet of a reversal, when there's no fundamental change, meaning no news catalyst, it becomes a better bet the more aggressive legs down, the more you press the ATR. Okay, that goes for the upside as well. Oftentimes for the upside, though, there is a news catalyst. And then what happens is, for intraday, since you're using tight stops, even if your win rate is only 25%, when you hit it, you get so many points out of the market compared to your stop that it still has edge, right? You can have setups that only win 5% of the time that still have edge. which is a concept a lot of traders need to understand at a deeper level. Okay, let's move on now from the intraday mentality, and let's look toward the day-to-day mentality as we head into tomorrow, Wednesday. This is, of course, the 5-minute chart. Why are we here? Well, I want to look at volume, right? We look at volume each and every day here. I'm looking for correlations in volume with stock price to tell us, okay, sample size of the market, a huge sample size agrees with this move in comparison to that move. So you see we had this big downside move. If we saw a massive increase in volume during that time, that would tell us that a big sample size of the market agreed that that belonged lower in that moment, which we should take note of, right? Because no two moves, even equal down moves and up moves, if they're on different volume, for me, those moves should be weighted differently. So looking at volume here, and what we're actually going to do is we're actually going to zoom in and cut out that one candle so we can get a better view here. Okay, looking here, you can see that, sure, we saw an increase in volume on that red candle, but we also had increased volume on the bounce out of there. I'm going to call that a wash, okay? We did see slight increases in volume on this dump-off move, but, I mean, it's not like we saw 1 million plus on average, which, in my opinion, would kind of be like the cutoff to see consistently on consecutive candles for a dump off like that, for me to consider that slightly out of the ordinary in terms of sample size, market opinion. Okay, up until this point, I'm looking at this as a neutral day on the volume on the 5-minute. Now, we did see big, look at this, over 6 million shares traded on the last candle of the day, but we did run into what was kind of like that resistance point right ahead at 497 for basically the entirety of what many would call power hour, even though it's not technically the last day of the week. In today's day and age, volume has gotten so high, and there are so many market participants that power hour used to be the last hour of the last trading day of the week. Now it's kind of really the last hour of every day. But I'm taking note of this because we saw big volume, but I have to kind of calm down a little bit about the big volume, considering that we had huge volume and still weren't able to reclaim that like 496.90, 497 region into the close. Okay, just considering that. Now, on to the big levels to watch on each time frame chart, the big self-fulfilling prophecy psychological areas to keep an eye on, starting here on the 30-minute chart. Okay, so we can see here we have that 50 period right around 497.50 and that 200 period right around 498.60. Okay, those are relatively close. 0.14, 0.15% away for the 50 period, 0.38% away from the 200 period. Listen, if I'm a bull, priority number one here on the 30-minute chart is reclaim both of those, ideally, and hold them as support, right? And if I'm a bear, really what I want to see is I want to see that 50 period, that white line, continuing lower at a sustained rate and helping to potentially push the market downside even more so. Right, from a psychological perspective, specifically looking at the 30-minute. Moving on here to the 4-hour chart, you can see that the 200 period is not really so in play right now, but that 50 period is. That is sitting right about 498.90, okay, and we're pretty close. We're looking at about 0.4, 0.45% away from there. Again, really simple here, considering that 500 is right there. If I'm a bull, I'm going to need to see that 50 period, reclaim as quickly as we can see that happen. And if I'm a bear, obviously any test of that, you want to see a rejection, but really if you're a bear, you'd prefer not to really see a test of that at all and just see continued downside from here, putting some distance between 500 and the stock price or the ETF price. All right, to the daily. This is the most important chart of all. This right here is one of the most heavily watched charts on the planet. And you can see that on this chart, we have the most heavily watched indicators on the planet, the 50-day, which is right below 481, and the 200-day, which is below 450. They're not immediately relevant. So, like I always say, guys, when the story is obvious, do not overcomplicate it. Because you could have the deepest understanding of TA in the world, but at the end of the day, TA is not extraordinarily complex. Right? Because why does TA work? It is a self-fulfilling prophecy. This is all psychology. Okay? So when we consider that, we have to look at this and almost like dumb it down a little bit, right? When we're looking at it, because you want what everyone's looking at because that's where the largest amount of decisions is going to be made. $500 a share is the clear story. Bulls, number one priority, reclaim 5. Bears, number one priority, head downside, put more distance between the current price of the ETF and 5. And if we see a test of 5, reject hard. Bulls, obviously, want to reclaim it, but not only that, ideally a retest and a hard hold of support and a rip upside through all-time highs. Okay. Now, implied volatility is a little bit higher. Okay, just understand that upon a return back down toward equilibrium, compared to that relevant trade time frame here, the last couple of months, that is a slightly elevated risk of IV crush if we were to see IV continue, or more so, fade back downside toward equilibrium. Let's take a look at the options bias in the chain from today. So we have quite a bit of volume, 9 million contracts traded today. That's a great sample size here on SPY. 4.4 million of those were calls, 4.6 million of those were puts. So we are, compared to what we've seen in the recent past, sure, it's a slight bearish lean, but that's relatively undecided comparatively speaking. Short-term speculators, right, that 0 to 20 delta range, on average, those are out of the money, right? Pretty far out of the money. And on average, those are going to be a lot shorter expiration than the others. 1.53 million calls, 1.82 million puts. So we are seeing, again, a slight bearish lean out of the short-term speculators. I would guess betting against 500 here. Okay. And then as is typical, not totally unexpected. You go toward at the money and it's more relatively undecided. But this is really interesting, actually. Typically, the 61 to 100 delta, those two ranges, those are the in the money and deep in the money contracts. Typically, you'll see those leaning bullish because we're talking about the S&P in a longer time frame context. But here, it's actually a little more undecided in the money, and the deep in the money is actually a slight bearish lean, though it's not overwhelming. I just thought that was interesting to share with you guys. Listen, if you got value out of this video, please subscribe to the channel. I greatly appreciate it. I think we can hit 2K by market open Monday, with your guys' help, of course. I appreciate you guys, and I'll see you in the next one.